So before I get started here, make sure to come over to ztrades.net, check out our terms and conditions page, read our disclaimer, as well as our terms and conditions. Nothing I say is financial advice. Let's go ahead and jump right into it. So a lot of people are asking that are new to options trading, and I hate to say it because I do believe being able to choose the proper strike price, really, I can go into some theories here that kind of apply to everything. But a lot of it comes with skill. I've traded SPY options probably thousands of times. Apple options, AMD options, NVIDIA options. I've traded it all. Traded all of it. I know something that's liquid, meaning there's a lot of volume, meaning there's a lot of people buying and selling and trading, right? SPY, as well as Apple, right? So I'm not too worried about spreads, how bad the spread is, the bid, the ask, and the mid, what the average is for what it's selling for. I can market order because I have a good broker, right? I can't necessarily do that on, let's say, TNDM, the diabetes company. I don't know if they're still doing those types of medications now. They're not biotech. Maybe they are. Regardless, CMG would be a good example. You can't do a market order on because you will just get absolutely cooked. You're talking about $500 wide options, and if it fills on the wrong end, you get absolutely destroyed. But let's just say I want to trade SPY, okay? And let's say it's a same-day options contract. Let's say today is May 30th. Well, if I expect a massive move that day, I can go out of the money. And in general, if I expect a massive move on something, and that's what I'm placing my money on, is I expect it to move very aggressively in that direction. That allows me to buy further out of the money. And those options move a higher percentage-wise, but they don't move as fast. I'm trying to explain this in layman's terms without getting too deep into the Greeks for those of you that are new, especially those of you that requested this video. The further out of the money I go, the slower that the options contract is going to move compared to the price of the stock. So if the stock's moving up aggressively and I'm way out of the money, it's going to slowly move up. The closer I am to the money, meaning the closer I am to the share price right here, this is SPY's share price. Let me explain this in multiple ways. Try to stay with me here. SPY is at 529, okay? Oh, come on, Robinhood, don't do this. The closer I am, this is 529. Let's say a 530. Let's say I'm trading a 529 call. Okay? This would mean it's in the money because it's above 529. It's 529.51. This would move very fast. So a small move on SPY would move these options very fast. They're going to move quick, right? If I were to be buying this one up here and SPY were to move, let's say 10 cents, that's probably not going to move at all. It's probably going to take, 25 cent, maybe even more, 50 cent move to get that to move a dollar or two, maybe more than that. Right now, if this was, a year out, this would move. But since it's a close expiration, May 30th, it's May 28th, right? Well, it's basically May 29th. The 28th's over, right? It's 7:41 p.m. Trading day is over. So if I'm scalping, let's say it's a very fast trade, I want to be in for maybe a minute or two, maybe up to 15 minutes. I'm buying at the money right here. SPY's at 529. I want to hug it. Sure, I can buy in the money. Sure, I can buy just right out of the money. This is 530. I don't really want to go much further than that because they're just not going to move that much. And then you may hold it. Let's say SPY pushes up and this goes to 89 cents to 91. You're like, well, that's not worth taking. And then you hold it and then SPY drops and then, you know what I mean? Then you get in that whole lot. I'm going to hold it till I get break even is what people that are new that do. And then you just end up holding it. I'm going to swing it now. I'm going to swing it again. And then it's worth zero, right? So I want to be, this is the share price. I want to be right here. Here or here. If it's a short-term expiration and it's a scalp. If there's some freaking event going on, like what, let's switch over to puts here. I'm shooting from the hip, making stuff up that hasn't happened. Are you serious? China, is that a rumor? China just struck a Taiwanese military base. There's incoming missiles towards their military base, and I want to do something wild. Then yeah, I could go gamble and buy something like this, where I'm only risking 9 cents. Buy a couple of those because it has the likelihood of dropping very violently and very fast. Right? I'm making up a scenario. Don't judge me in the comments off a scenario that hasn't happened. Right, or how it would play out. I'm making stuff up here. Right now, if I'm going to go out, let's say to, I don't know, January 2026, and I'm bullish on SPY, I don't necessarily have to choose a $6,300 contract at the money. If I expect SPY to move up $50 over the next year, right, I could even buy something wild. I could buy a $600 call. I could buy a $575 call. Would I do that naked with all that rot there? No, I would do a debit spread. That's the smartest thing to do, in my opinion. For long leaps, I don't want that premium decay attacking those contracts while I hold it for the next year. So, let's take a look at something else here. Let's take a look at let's see if I can find something with a bad spread to show you guys an example. Right, so again, let me, before I get off this, Apple's the same just like SPY. It's very liquid. There's a lot of, look at that beautiful move to the downside. They are freaking liquid. They are absolutely liquid. I'm buying a put, same thing applies. If it's a weekly, I want to be as close to the money as possible. Right, if it's a Monday and I'm going to swing it just until tomorrow, maybe I could go a little bit further out, right? I could go a little bit further out. 187.5 for 39. Yeah, sure. Right? If it's a day trade or a scalp, I need to be as close to the money as possible. It's at 190.21. A 190 would be perfect. That would work that would work perfectly for me. Right? Very close. 21 cents out of the money on a $190 stock. Great. Right? Would that work on something like this? Which is why, in my opinion, the best way to play this is to buy equity and then short it when you're bearish and buy it when you're bullish. But, let's say I were to be trading this do a monthly. $1.50 is a huge, that is really out of the money. You're just looking at it as, because I'm just speaking my mind here, so hopefully you all can understand. Yeah, it's up 225% today, but it had a nice little pop, and that doesn't usually happen. But in general, right, for it to go from $1 to $1.50, that is a big move. What is that, a 50% move? If I'm wrong, let me know in the comments below. That's a huge move, $1 to $1.50, right? $2, that's a 100% move. You're not going to see that on Apple, right? Apple go up $100 in a day. That's not, that's the equivalent of this. So if I were to be bullish, I would buy an in-the-money call on this. It's at $1. I could buy $1. I could even buy, if I'm really bullish on space, which personally I'm not, if they had shares available to short today, I would have done it, but they were out. I could buy a 50-cent call, right? I could buy a $1 call. Would I buy a 150? Unless I was expecting something, like I said, insane to happen. Like, hey, they're announcing they're going to launch in 2 weeks. I believe that it's going to run up until the launch, and what happens when they launch, whether it's good or bad, it always drops, right? And if it is good and it goes up, there's premium crush there. It's like playing earnings. You don't play you play the run up, the anticipation. You dump it, right? Side note on the gamblers that don't understand that. So if I were to play space, I'd be buying in the money, because $1.50 is a huge move. The stock's $1, right? That's like half of what it's worth right now. 50-cent move. That's big. So I would buy that, or I'd buy this. Dollar's fine. It's $1.04, 23 cents, right? 23 bucks, perfect. Then we get things that are a little bit harder to trade. I can't really think of. We'll pull up Sava. We'll pull up Sava. I know Cassava Sciences. I've been playing cash secure puts on this thing I've been playing Sava for so long. I know this stock very well, and I know that the spreads are not too good. Let's say we're to be doing a monthly. Keep in mind, monthly expirations. What's a monthly expiration? These are monthly expirations. Here, 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 here. See how there's only one per month? July, August, November, right? When it gets closer to July, there's going to be the first week. They're already doing it right now, but August, right? They'll start writing those weekly contracts in here. In between August 16th and November 15th, all those are going to fill in between July 19th and August 16th. Just like there is now. Now there's weeklies. They don't have those yet over here. So because these monthly expirations have existed longer, there's already going to be volume there and people buying and selling and trading those, right? So if it's something, a stock like Sava that's not as popular as Apple or Microsoft or AMD or Nvidia, right? I definitely would want to be focusing on the monthly expirations. Sure, I could trade a weekly, but I'd have to be very close to the money. How bad is the spread? Look at it. This is awful, right? 39 to 74 cents. That's not very good. That's you would have to do a limit order on that, and you'd be lucky to fill. And you'd also be lucky to get out. Let's see if a monthly is better. Let's say I were to be bearish on Sava. And usually the round whole numbers, 20, 25, 30, right? There's the spread isn't as bad. See, that's not as bad. Look at that. 104 to 123, that's pretty good for Sava. Or for one of these stocks that aren't as popular when it comes to options trading. Right? If we go to a 20.5, it's not the volume 0. You see what I'm saying? 19.5. The volume 0. These round numbers, there's volume there, 21, right? Or at the money. 143, 167, not that bad. Volume 7. In the money, that's one of those 0.5s, right? 21.5, $22 puts in the money. It's nothing really there. Right at the money there is, and the round numbers. So, but I really don't want to go too much further out than that unless I'm expecting a very, again, violent move. Right? I'm just saying, if I were to potentially be bearish, let's check out the call side. I know those 20s, there's probably volume. No, there's not. Let's check. Oh, this is just bad. We can't trade this, right? We can't trade a 20. You could, if you're swinging it. You don't have that much long unless you're expecting something wild. But you can see, remember what I said? 20, 25, 30, those increments of 5. You saw, look at the volume. Right? There's 0 volume on that. Then we go to the 25, 72. Spread isn't that bad. It's only 9 cents. Right? So this, I wouldn't day trade something that is a stock that isn't very popular like this. $5 on 21, percentage-wise, is a heavy move on the stock, right? So let's go ahead and pull up Nvidia. Now, this thing is just non-stop here. So Nvidia, I expected a monster move on this, and I'm expecting it to keep running. It may have a peel back from here tomorrow a little bit because there's bearish divergence on it. I still think it's going to go higher overall, but I could do something crazy like this. I could do something as crazy as this is just almost pure stupidity. But hey, look, it's up 440% today. I could trade a $1,400 call if I were to swing it. Day trading, am I going to make any money off that? Maybe a little bit. Maybe. Right? But if I were to swing this, and I'm expecting Nvidia, up till June 6th, as long as China doesn't invade Taiwan, to make a monstrous move of another $50 or $100, right? I expect this to still move. And I expect the IV increase for the anticipation of the split to exceed the theta decay, which is almost like a hedge, the fact that the IV will be rising on the call side. So I can do something crazy like that, and buying something $300 out of the money on something that's $1,000 would be almost, not exactly the equivalent of, if Sava's at $20 and I'm buying a $25 call, right, percentage-wise. So a lot of it, to sum this up, comes with skill of trading options and seeing how they move. Watch them to learn. Pick a strike far out for day trading as well as swing so that you guys can learn. Make sure to like and follow for more.